digital is the big opportunity for Indian IT companies, and they have to play catch-up with the global bigwigs. Accenture clocks revenues worth $20 billion through digital, which accounts for 55% of their total revenue. TCS and Infosys pale in comparison, with digital accounting for only over 20% of their overall revenue. But things are looking up, with TCS reporting double-digit digital revenue growth for the first time in 12 quarters. Can Indian IT cash in on the digital opportunity? Is this a decadal shift in the IT growth landscape? And does growth justify the recent market rally and IT stock valuations? The search for answers to these questions and more starts right now.
Hello and welcome to this very special show, IT Rebooted. Joining me today is Mr. Rostow, the MD and CEO of Mindtree, Sudhin Apte, CEO and Research Director of Offshore Insights, and Anish Tawakle, the Head of Research at ICICI Pru AMC. Gentlemen, thank you very much for taking the time out and speaking to CNBC TV18. Rostow, let me start with you. It's clear that digital technology has revolutionized our life, the way we communicate, the way we shop, pay our bills. How big is the opportunity according to you, and can it take the Indian IT companies back to their glory days of early 2000s?
Digital is fundamentally, like you mentioned, has disrupted and transformed our lives significantly. I was part of a group from trying to quantify this as a market opportunity, and our estimates show that India alone can add something like $1 trillion to the Indian GDP by leveraging digital. So it's almost a 50% incremental GDP creation possibility in a limited market like India itself there. And then when you multiply it for the rest of the world, it's a huge market opportunity. But I'd also caution, I don't think it will bring us back to the 2000 kind of a growth rate, because in those years the IT industry used to grow 20-30%. That's probably not going to happen, because the size of the industry has become much larger now. So the installed base has become much larger. So the growth percentages I don't think will compare to the decade ago kind of growth percentages. But nonetheless, it's a phenomenally exciting marketplace opportunity.
Okay, Sudhin, come in on this. It's quite clear that digital has pervaded every aspect of our lives. But have the Indian IT companies reached the scale and penetration needed to crack this digital code? Can we harness this entire opportunity?
If you look at bank, IT and banking can't be separated. If you look at car, 15 years back, largest bill of material item used to be steel, then it became plastic. Already today in high-end vehicles, the largest bill of material item is actually electronics and software. So, every aspect you see, whether it's a building and machinery, it's plant, be it, banking or insurance type of industry, the entire operations of those businesses are getting digitalized. So when that gets digital, the opportunity drastically increased. All these years we were looking at IT as a potential. Today, you are looking at ops also as a potential to go and sell to, and that's why the space will grow bigger. But that essentially I don't want to say that all will come India's way. There would be a lot of people and.
Okay, clearly the space is big, but so is the competition. Anish, so if the early 2000 kind of growth rates are not possible, the 20-30% on account of base, are we at least in a phase where we can see a secular double-digit kind of growth rate for the Indian offshore companies?
So let's try to put this in numbers, right? When you talk about the glory days in the early 2000s, if you say look at 2005, India was in the Indian IT sector was about 5% of the IT services market, right? At that time, when when the sector gained 1% market share, 1% on 5%, you grew 20% faster than the market. So the market was still at that time also growing at about 5%. The Indian companies, if they gained 1% market share in a year, grew at 25%. Today, the Indian companies are about 20% of the sector, right? If they now gain 1% market share, they grow 5% faster than the market. I mean, all the research that we've seen suggests that the market is still growing at about 4 to 6% rate, right? So if you say, look, you can grow 3 to 5% faster than 4 to 6%, you get to kind of the double-digit range, but maybe that's a little bit of a stretch target also. So double digits would be good if it can be achieved.
Sudhin, when India's largest IT company TCS hinted about double-digit growth, it sparked a hope in all of us. Do you think it's too premature to talk about double-digit growth, at least for now, for the Indian companies?
Today, if you see the industry, the traditional piece constitute to roughly 75%, and that piece is sluggish in growth. It's growing by 4%, 5%, and if you see the components, some components are actually going down. But if you see other 25%, which we can call digital in today's context, that's growing much faster. So 25% is pulling the industry from 4% to 6.5% to 7%. When that 25% will become 45% or 50%, maybe in 3 years timeline, I think the growth will go further. But this we are talking about little longer picture. From near-term perspective, FY18, our offshore insights numbers show that the industry grew by 6.75%. We believe that based on our research, 18-19 will show a growth of 7.5 to 8%. That means the growth will grow up by a percent and nearby percent. You're following that, possibly if there are no other dynamic, if just we look at a technology trend, then we may see that possibly industry as a whole will grow faster than that.
Okay, Rostow, come in on this. An argument which is made against digital being a panacea for improving the growth rates is that digital already contributes about 25% to the industry revenues, as Sudhin pointed out. In the case of Mindtree, it even goes up to 45%. Yet, despite a significant portion of the company's revenues coming in from digital, growth rates are still languishing in single digits. So what gives you the confidence that when this digital contribution goes up even more from here, growth rates will improve? Have you reached that inflection point when the growth in digital will more than offset the decline in traditional services?
I think we are close to the inflection point at a Mindtree level, and I think the industry as a whole will also hit that inflection point fairly soon. If you look at last year, Mindtree grew approximately 9%, but my digital business grew about 18.5 or 18.8% there. So digital is growing almost 2x of Mindtree. It's compensating for either a price commoditization or a price pressure, etc., that we are seeing in some cases, or where we have voluntarily cannibalized volume significantly and therefore created value for customers even if we sacrifice our own revenues there. So we are close to that inflection point where the takeoff of digital will compensate for the drag on the traditional services.
Anish, do you concur? Do you think the industry is at this inflection point?
So, Rima, my thoughts were that, exactly as you said, that, most companies have already seen a significant increase in share of digital in their revenues, and yet the growth rates are where they are. So, if say a company has already achieved 25% or 20% share of digital and its growth rate is what it is, should we really be too optimistic about that growth rate changing very suddenly in the near future? I would be cautious on drawing that conclusion.
Okay, let's just shift our focus a bit from growth to margins then. And Sudhin, come in on this. What is the longer term trend in margins? Yes, it's high right now for the digital piece of the work, but do you see it sustaining at these levels? Does it come down? Because anecdotal evidence suggests that niche, smaller players are bidding quite aggressively for the digital work, and that will pull down the overall margins. And at some point, perhaps even digital work can get commoditized.
The margin in digital service lines can be higher, but at the same time, as we get to the mainstream and the work will evolve, eventually competition and pricing pressures will catch up there. So maybe sometime there would be a honeymoon period, especially if you have a specialization and differentiation. But as you go along into larger pieces of work, there will be a stiff competition. So in the longer run, just like a double-digit growth and a higher percent growth than that looks little far and long-term possibly. Similarly, I do believe that substantial improvement in margin too will be a little difficult. There will be some exceptions, one or two companies who have specialization may be ahead of others, but I don't see that as a trend.
For now, enjoy the honeymoon period. Rostow, so far at least currency has provided a tailwind on the margin front. But X of that, do you see margins headed higher?
My thesis is the bottom line growth will be faster than the top line growth. We've seen that in Mindtree, and we're beginning to see that in the rest of the industry as well. With larger portion of digital typically tends to be more profitable for many reasons, etc. So everybody's bottom line will grow beyond the point on currency which Anish made. I am not counting it because I have seen currency move in different directions during the course of a single year.
Okay, yeah, currency has been a fair weathered friend. But Anish, Rostow is at least confident that for Mindtree, the bottom line growth will be faster than that of the top line growth. Can the same be said about the industry?
So look, some of the and here I think the picture will be different for different companies, given the starting points today are different, right? There are some companies, particularly in the mid cap space, which have seen margin compression over the past few years, partly because they were investing in technology and right. So those companies could see some margin uplift and mean reversion going back to what would be called normal margins, whereas companies which are probably right at the top might see some compression in the margins. So there I think the picture will be different for different companies depending on the starting point, so where they are today.
Okay, let's get the global versus local comparison going. Sudheen, and this question is directed to you. Accenture, its revenues right now are 2 times that of TCS, but its digital portfolio is 4 or 5 times that of TCS. Have the MNCs stolen a march over the Indian companies when it comes to taking over the digital work?
The definition of a digital is very widely defined, so that's a point number 1. Point number 2, the digital is about business process, digital is about transformation, digital is about closer to client, digital is about consultative. So all these aspects suit some of the multinational companies. But I don't want to paint Accenture and IBM and Dell and whosoever in the same common brush. I think Accenture may be an exception in that sense. We don't see that similar growth with Capgemini or IBM. I think TCS operates in a very different space. TCS operates in spaces where volume of work can be very high, whereas I think the areas for which or the values for which you can get consulting are going to be limited. Bottom of the pyramid, TCS still has a lot of opportunity. There are a lot of opportunities not only in IT but in operations. So both companies work in a little different paradigm, but current couple of years of a digital phenomena, which is consultative, transformational, business process focused, suit Accenture more than Indian players.
And Sudheen, just to follow up, since your clients will deal with Indian IT companies across the board, which Indian IT company is best prepared? How do they stack up right now?
I think the larger companies which started early and stayed on the path, like for example TCS, are going to see a little bit of a benefit than others. Firms like Infosys, who had a flip-flop, will have some challenge. Now in mid-tier, if you see, for historic reasons, for example, Mindtree has been working always with CPG companies, retail. They had been a strength in commerce engine, content, and they had historical practices and clientele for that. So they got an early lead because the client and context they were aware, and once they could embrace the technology, they could move forward. Similarly for Persistent, they've been working with technology companies that enable digital. So you see some companies, because of quick ability to align to the new force, have been faster growing than others.
On that note, it's time for a short break, but stay tuned. Welcome back to the special IT Rebooted, in conversation with the 3 guests, Rostow Ravanan, Sudheen Apte and Anish Tawakle. Rostow, the NASSCOM McKinsey survey shows that digital is India's tech opportunity. Digital revenues perhaps can triple from here on in the next 10 years. Are we on that path according to you?
Defining the Indian IT industry at a broad level, I think there's a high degree of confidence that the industry will probably triple in the next 10 years. The industry is approximately $150–160 billion industry today. I think the industry will become easily $450–460 billion in the next 10 years.
Okay, Anish, a lot of large numbers and big numbers are being thrown at us, but is this a tipping point? Is this a tectonic shift which can cause a decadal shift in the Indian IT services business?
See, it's actually instructive to look at history over a very long period of time also, right? I think there's a lot of people still working who would have started their careers when we didn't even have email, right? Then we moved to email, then we moved to instant messenger, and now we moved to WhatsApp, right? So technology change has been happening all along. I doubt whether you would say that all of a sudden the pace of change has moved to a completely different orbit. So if you say, look, technology change has been happening all along and the market growth rate over the last 20 years was 4 to 6%, how much more would you expect tech companies or enterprises to be spending on technology? I don't know. I mean, I would be cautious and say, look, let's not build in extreme inflection in the growth rates there.
Okay, Rostow, Anish is a bit cautious. Do you have the confidence to say that growth in the coming few years will at least be more than that we enjoyed in the last few years? If not, we're not going back to those 2000 kind of growth rates of 20 to 30%. But is growth going to be better from here on?
I definitely think that's probably a directionally correct statement. The growth rate over the next 2 or 3 years should accelerate because digital is becoming more mainstream. Good companies in the industry have made a lot of investments in capabilities, skill, etc. And I think therefore we should see some amount of improvement in the growth rates over the next 2 or 3 years.
Sudhin, is this a rising tide lifting all boats kind of a situation, or do you see some shakeouts?
Is the digital is going to be at an inflection point and everybody is going to see the growth back? I actually don't think so, and I want to go back to my initial point that actually digital is going to be a polarizing factor because the companies which have been able to transform, irrespective of size, are able to transform better and faster to align the new reality are the ones who are going to be faster or to be growing faster than the industry average. And I do believe that there are only few companies in a mid-tier who have right leadership, superior capability, ability to invest, ability to have sales and client-facing roles that I talked about, and ability to create solutions. So I think in a tier 2 we are going to see a lot of turmoil in the next 5 to 7 years, and even in a tier 1, and I'm talking about top 5 including Cognizant, I think we are going to see a couple of shakeouts there. We already have started seeing the companies which are not able to articulate the strategy even to their clients are actually struggling big way. The flip-flops in leadership are taking a big toll in one player. So I think we are going to see a lot of changes and shakeout in this industry, and I don't think there is a flashpoint or a tipping point for a takeoff to a double-digit growth or a higher growth. Rather, I would say we are at the crossroads where industry is going to get divided into winners and the losers in the next 5 to 7 years.
Sudhin, this automation has also killed quite a few jobs. Your thoughts on the hiring trend from here on?
10 years back, it used to take roughly 32,000 to 34,000 people to generate a $1 billion revenue. Today that number has come down to 18,000 to 20,000 people to generate $1 billion revenue. There's a little bit of a middle management redundancy. At the top, there always have been less people. So overall intake will actually be flat, but the pyramid model and in a new DevOps or automated sort of application development, you may still need junior people. So campus and 1 year to 5 year, you'll see some traction, but subsequently actually the intake will go down.
Rostow, would you agree that at least at a campus level, hiring will pick up in the coming years?
Recruitment at a campus graduate will probably be fairly strong. The challenge will be at the middle management level, but if I were to just break up the problem into 2 halves, I think there will be very strong momentum for hiring at a graduate engineer level. Primarily because they are all digital natives, come with very high learnability, their skills, our ability to, the industry's ability to mold them into the ways of working, into the skills of the future, etc. is much higher. So there will be, I would say, relatively high, I am relatively more optimistic of that pool. For the middle management in the industry, I think there's a little bit more, more work that needs to be done before you can get there.
Okay, running out of time. So Rostow, one last word from you. IT is getting rebooted?
Look at your own industry, Rima. Look at how much technology has changed your own industry. Many years back, the largest media buying house was an ad agency, and today it's Google. the amount that technology has pervaded all of our lives and the amount therefore businesses are spending on technology means that the long-term potential, opportunity, relevance of this industry, I think is just phenomenal. Very, very excited to be in this industry at this point of time as an individual, and when my kids grow up, I would like them to be in this industry.
All right. Sudhin, with great power comes great responsibility. With great opportunity comes great competition.
Although, so what happens when the buying is for the digital work in operations or business process or client facing activity, then extensive knowledge of that industry domain vertical and deep dive application or intellectual property become very important, and that's very different than application development or package app implementation or infrastructure support. For example, a company like Workday came from nowhere a few years back and today is doing large chunks of HR for every Fortune 500 company. Is it an IT company? Well, not really, but is it IT driven? Absolutely. So I think you will see a lot of these type of companies coming up which will deliver a specific business process with a specialization and on pay-per-use basis or more effective price economics. So you're going to see a competition coming from different spaces.
Okay, competition is coming in from different spaces, so there are many takers to this digital pie. Anish, just one final word, and this time from a stock market perspective. IT stocks have had a great rally up until now. Is it justified based on what you've heard from Rostow, the optimism there, and even from Sudhin?
Well, look, the reality is the sector had been beaten down. It had not performed for a while. Also, look, you also have to remember is that the growth rates we are talking about are constant currency or dollar growth rates, right? We're not talking about rupee growth rates here. So any depreciation of the rupee pushes up the rupee growth rate further. And as we've seen over the last few months with oil prices rising and some pressure on the current account, there is pressure on the rupee. And to that extent, the sector is a beneficiary of that. I would also say, look, it's not as if the overall market valuations are at levels which are cheap. So if the market overall is not that cheap and one is not really playing for that big returns, that still makes the case for investing in the IT sector. But one should not base that investment or predicate that investment on that sector delivering 15-20% growth rates in the future.
Okay, gentlemen, thank you very much for your time as well as perspective. Thanks again for watching CNBC TV18.
Gabon.